Easter weekend is behind us, and as history predicted and we talked about on Friday, today the market did not rise. It was a sea of red out there, with the only thing climbing being the volatility index. Now the VIX has now been above 27 for 14 days this year, and unfortunately, if history is a guide here too, years with over 11 days of the VIX being above 27 tend to be less positive overall. However, Bitcoin has been rallying, and in the cryptoverse, Solana is printing a new, larger reversal structure that we'll look at in the charts. Meanwhile, the DXY is crashing, with stocks moving down in tandem. Now, normally we would see risk assets fly with the dollar weakening, but the only thing climbing in response has been bond yields. So what in the world is happening out there? Join me as we review the macro and key charts to piece it all together for stocks, commodities, and crypto. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and I hope you guys are all having a good start to the week after the long holiday weekend. Before we dive in, if you do find value in the content, please like, comment, or subscribe below. It really does help get this out there to more people. That aside, thank you so much for the comments and positive feedback on the Perp trading video I put out there this weekend. If you missed that or the TradingView chart setup video I did previously, I put links to both of those in the description below. And also on the channel page, I put together a playlist dedicated to all that educational content so you can easily find it there. Now, just a quick follow-up note on the Perp trading video. I was chatting with Mopbot's CoinOps from the Invest Answers community, and she pointed out the benefit of trading perps natively in USDC as opposed to swapping from Solana to USDC. Now, you can't do that in Jupiter like I did in the demo, but she likes to use Bitunics where you can do that natively. And the benefit is that it will more cleanly track your transactions for taxes when you're using CoinLedger or the Coinly plugin, something like that. With Jupiter and the swapping between Solana and USDC, the conversion isn't that clean and you end up having to do a lot of manual work. So if you want a simpler process for taxes, consider checking out a non-KYC exchange like Bitunics to do your perp trading. That aside, it does make me really happy to hear that people are finding value in the content, because my goal with all of this is simply to educate and empower retail investors. I'll give you just a little abridged version of my backstory. I had wonderful, caring, supportive parents, but they never gave me a financial education. It just wasn't a skill set that they had to pass on. So I came to investing later in life. And earlier on, when I was running my business, I was making decent money. I was just saving, and I didn't realize how much debasement was taking away from me each year. Then I thought, okay, I need to start investing, but I don't know how I'm going to get a financial advisor. I was with one of these bigger firms that you've all heard of. I won't name any names, but newsflash, they don't do a great job, and I was only getting like 4 to 7% a year unless the market was really ripping. So then I finally sought out the right resources to take my finances into my own hands, and it's been a wonderful and empowering journey. So my hope is that some of this content, for those of you who are really new to investing, it can break down some of those barriers to get you started. And for those of you that are already well on your way, I just hope that it can provide some alpha or give you some edge to amplify your returns each year. Okay, enough blabbing about me. Let's get into what we're all here for, markets. And the main thing I'm watching right now is bond yields. With global uncertainty, international players are unloading US bonds again, increasing the bond yield today to 4.4%. Now, a couple of weeks ago when we hit 4.5% in the 10-year, that's when the Trump administration intervened with the 90-day tariff pause. So let's see if we can get some softening on tariff policy this week if bond yields keep climbing up. That would really be a tailwind for markets. The market is really eager for a policy shift on tariffs or rate cuts. Ideally, we get both. If you're asking my opinion, while I do think Jerome Powell is very late to cut, I don't think all this pressure Trump is putting on Powell is helping markets find their footing. Uncertainty is high, and as we all know, the one thing markets hate is uncertainty. They need to be able to project out into the future by 6, 12, 18 months, and current conditions are just making that impossible. Now, if we're talking about the economy, recession talks are at an all-time high, but we've seen that in the data for months. I would suggest that we've been in a recession for the better part of a year, and by the time it's officially called by a government, we're normally to the tail end of it and are actually starting to come out of the recession because all their data is backwards looking. Now, we did see a pre-tariff buying spree, with both individuals and businesses loading up on bigger purchases before the tariff increase. So the numbers may look good currently, but I suspect in the next couple of months, we're going to see that pain reflected in the numbers. Government spending has stopped, government hiring has stopped, and consumers are drastically slowing down now too. Now, we all know airlines are hurting. International tourism is way down in the US. And just as an anecdote, I was in LA for work a couple of weeks ago, and those good restaurants that are normally booked 6 months in advance, you could get a table any night of the week, and there was barely anyone in there. On the international front, I have family in Europe. I'm in Canada right now. If you listen to the news, they're making it sound like it's ultra dangerous to travel to the US, which is causing that tourism slowdown. I actually had a relative who's coming out from Germany to Canada change their flights because of a stopover in the US. Other folks who are going to the US are being told to bring a burner phone just in case. It's really crazy out there. I'm hoping it subsides soon, but that's just to give you a picture of some of the backdrop. So I don't want to make this sound like it's all doom and gloom. I just want to give us a foundation so we can talk about where the opportunity is on all this. That's the big question that you should all be asking yourselves at any extreme time like this. Don't just be sitting on the sidelines, afraid to make a move. Put your mind to building a thesis and then execute on that strategy. Things will eventually recover, and now is the time to identify winning sectors in the near term and long term. So the most important thing you can do to increase your success as an investor is to get two things right: timing and topic. You don't necessarily need to pick the exact right company, but if you can identify an upcoming trend, that would be the timing, or the right sector broadly, that would be the topic, you can make outsized returns. A short-term example of this is COVID. Granted, when lockdown started, no one had any idea how long they would last, but as we saw stimulus coming into the markets, you could think of how life and work would change from home and what topics may have tailwinds during a period like that. The parallel here may be onshoring. While much of the tariff talk could just be bluster for negotiations, the administration has been very clear about wanting to bring certain key things like chip manufacturing, robotics, etc. onshore so we're not as reliant on other nations for critical components. Now, I don't think they care as much about where your Nikes are manufactured, but chips, energy, that sort of thing, that's a different story. If we're taking the flip side of that trade, and I'm just thinking about the next few months here, it does seem like airlines are hurting, travel is down as we discussed earlier. I read that most Americans are projected to stay at home this summer instead of taking a summer vacation abroad. So where is that disposable income going to shift to? These are the kinds of questions you should be thinking about as you're looking at beat up charts that have the potential to rebound. Yes, we're looking at them from a TA perspective, and we want good chart structure and setup. But if we can also look at the macro backdrop and what companies may have tailwinds, we increase our chance of winning even more. Well, speaking of beat up charts, that's a perfect segue for us to dive into TradingView. I'm going to skip over the Forex Factory calendar today since we're really still in a news-driven environment and the things coming out of the White House this week are going to move markets more than these events. But we do have unemployment claims coming up on Thursday morning and consumer sentiment on Friday morning, so that might have a slight impact. Also, we're still in the thick of earnings season. So the main ones this week are Tesla tomorrow and Google on Thursday. But if any other companies that you're invested in have earnings coming up, please mark those on your calendar and pay attention because those could be inflection points on those charts. Okay, so moving over to TradingView, we're going to start on the S&P 500 and I'll make this full screen. We still have this downtrending resistance that we've been discussing. We had that big move down, bounce off the 50%. We're in kind of this consolidation pattern right now. And we had another gap down red day that went a little bit below our 51.27 support, but did rebound a little bit into the close, which was a good sign. We now have these couple small gaps to fill at 52.51 and at 53.85, and then this major gap from the initial drop down at 55.72. So we're still watching those, but overhead, this 50% of the move is really our main resistance. Until we can get over that and turn it into support, we are still at a risk of breaking down lower. And as we discussed over the last couple of weeks, over the last 7 years, we've had 5 major corrections, and 4 of 5 of those have seen a lower low. So it would not be surprising to see us form a lower low before we start a more meaningful recovery. And as we talked about bond yields going up, so if we see a lower low, that would most likely push bond yields up, which may be the impetus for either rate cuts or more intervention from the White House on tariff policy to juice the markets. Just looking at the NASDAQ quickly, this is a very similar chart, so not too much to say there. But if we do look at the HSI in contrast, they had a very strong start to the week comparatively. And as I mentioned about a week and change ago, I had that Alibaba trade that I was really looking to ride up here, but I got out of it because of the potential of Chinese stocks being delisted in the US. Otherwise, I would love this setup and I would be more heavily invested in China, but that uncertainty right now is just too much of an uncontrollable risk that's not stacking the odds in my favor. Just going to the DXY here, the dollar, we had this bigger consolidation range for the last couple of years, and we broke down from that, which is expected. We're expecting more of a macro downtrend for the dollar, but I did not expect it to be this quick. This last move here was quite abnormal, and I would have anticipated more of a bounce up, maybe to test some of these zones before we break back down, which just speaks to the overall weakness in the dollar. If we go over to gold instead, look at this in contrast. This is on the monthly, and this has been just such a parabolic move up. Again, we're still targeting that 3,600, but this is really looking like blow off top territory. If we look at the last time that the RSI has been this overbought on the monthly, this was the GFC, the start of it in 2006 and 2008. This was COVID. And this is where we are now. Now, I would suggest that this event is not as severe as either the GFC or COVID, because this, at a snap of a finger, tariff policy could change, interest rates could come down, and we would be in a far different environment. So just going back to past blow-off tops, this is 2006 at the start of the GFC. We had this initial blow-off top and then retraced quite a bit. And then this consolidation tightening range that we've discussed, and this went on for over a year. So I don't think that gold is necessarily going to crash way back down. But what I've been saying is that if we're having a blow off top, the most likely pattern is some kind of consolidation, and that could go for months or even a couple of years before we take our next move. Because as we see on gold, there are periods where it just has a lost decade plus. Or here from 2013 to 19, we were just chopping around for years in that range. So that's not uncommon for gold, is either consolidation, a little retrace, same thing here, blow off top, and a bit of consolidation. And same thing here, blow off top move, consolidation, testing those highs before breaking out. So just be ready and be on the lookout for more of the same. Moving over to digital gold or Bitcoin, we did break out of this 10-week downtrending resistance, and this right here is starting to look more like a bull flag as we continue to move up. That said, we are into key resistance of that 200 MA, and from our little double bottom here, this was our exact price target at about 87,500. So I would expect some little pullback or consolidation here. And while this pattern does look promising for more movement to the upside, and we've still got a lot of room to run here on the daily RSI, if we pull up global M2, which I will in a minute, we could still anticipate one more move down before genuinely breaking away. And the RSI has plenty of room here to test this underside support before continuing up. Okay, if I do pull up global M2, make this full screen, just as a reminder, we've been tracking this pretty closely, but on global M2, there was another pullback here before we really went off to the races. Again, we're not seeing into the future here. This is just on a 108-day offset. And if you'll notice here, this was the day that tariffs were announced. That was Liberation Day, and global liquidity has been growing quietly in the background. Just closing things out on Bitcoin, if we do turn global M2 off and we look at overhead resistance, this white line here at the bottom of the previous range, that is at about $91,500, which corresponds with all the price targets of 92K. That was our underside support for our previous trading range. You can see how I have this drawn in here. So that will be our first hurdle. Our next hurdle beyond that is the round 100K number, and then 102.5 also played a lot of resistance. But if we can get above some of these resistance points, I think this next zone we could run up through rather quickly. Moving over to Solana, and I'll just make this one full screen as well. We know we have ETFs incoming. We broke our downtrending resistance, both of these. And now from this bottom, there was a small inverse head and shoulders that has a target of $150 at this blue line. So we're lagging a little bit behind Bitcoin in that we haven't hit that technical price target yet. But look at what's shaping up now on the daily. We have a beautiful, larger inverse head and shoulders pattern, and our neckline is right here. So I'm really watching the daily close today. We really want the daily to close above $136.5 because if we break the neckline, it invalidates the pattern. But this price target would be all the way up here at 180,000. So that's your shot of hopium today for Solana. We'll see what happens and if the ETFs can provide some of those tailwinds. I'm going to skip the miners today, but Mara and CleanSpark are still holding their bottom support. And as Bitcoin goes, I think so will the miners. If we do look at MicroStrategy really quickly, we're here on the daily, and MicroStrategy finally broke that downtrending resistance. It is showing quite a bit of strength. We broke through, we back tested this for support, and from this little bottoming pattern, we still have that target of that $375, $77 range right there. So let's see if we can hit that. But if Bitcoin runs, MicroStrategy and the miners and all other proxies will run in tandem. Just moving over to a couple commodities, we have natural gas here on the daily, and it continues to break down. I thought from this zone we may have seen a little bounce, and I was hoping for that for a short entry. But as we discussed last week, we have this normal head and shoulders pattern here. So taking that from the neckline, we have our price target all the way down here at 260, and the leveraged funds for natural gas, BOIL, BOIL on the upside, or cold, COLD for going short, would be a great play. Right now, I'm still looking for some kind of reversal to hopefully get in on a short on cold and try to ride that down to the price target, but natural gas continues to break down. Okay, looking at oil briefly here, WTI, we did have that major breakdown, which has now bounced and is retesting this zone. Again, remember, support and resistance is not necessarily an exact number, but it's a bit of a range. So for something like oil, I would draw that support and resistance range right here. So if we can get above this, I imagine oil may have some room to run. Okay, moving over to SMH really quickly for the semiconductors. You can see we have had a weak number of days. If we're thinking a few years out, there's still going to be a lot of demand for this. There's just so much uncertainty in the sector right now with tariffs. If we go over to NVDA, you'll see that same weakness on the NVIDIA chart. And what I will say here, I think anywhere in the 2-digit range on NVIDIA, and we're into this major support zone here, is a good buy. But people have been making the comparison between NVIDIA and Cisco in the dot-com bubble. I'll just bring up that chart here so you can see it. So it is kind of uncanny how they've been moving together. The one risk I do see from NVIDIA on the all-in pod last week, Chamath was estimating that about 47% of NVIDIA's revenue goes to China, and not into China directly, but through Cambodia and Bhutan and other places that are buying so many NVIDIA chips. And you're like, well, what are they doing with all those? But they're obviously flowing through to other places. So if that truly gets cut off, what would that do to this stock? And I wish I had more of an accurate prediction. I believe in it. I think there's long-term demand. But there is that risk out there of what is going to happen with their China sales, and would something like that cause us to continue to mirror the Cisco chart? But keep an eye on this. These could be good entries here, and you could set a stop loss just below, and hopefully we get good news that would cause this to rally back up. One other semiconductor play that I'll pull up that I just got into is TSM, Taiwan Semiconductor. And the reason for getting into this, if you zoom out, yes, it's beat up, but when you look at past support, it's holding up a little better than some of the others. I suspect this is because of their US manufacturing. Also, Tesla is getting a bunch of chips from them for their Optimus robots. So it seems like TSM could be a standout in the semiconductor space. And I've just started building a position here between Friday and today because we are into all this historic support. And we do have really great volume support here at the 140 range. So something to keep your eye on. But again, watch out for breakdowns on this whole sector. And we know we have invalidation zones where you can set your stop loss if we break below this to get out of the trade and minimize your downside. Okay, if we go over to Tesla, Tesla is really at an inflection point, and we're breaking back down today just ahead of earnings tomorrow. So I think earnings are going to be the deciding factor. I'm just going back out to the weekly so we can all see this. We have this really strong underside support that goes all the way back to the COVID lows. So if earnings don't go Tesla's way and analysts don't like what's coming out tomorrow, we could make our way down to revisit this. And maybe this would kind of be a good point where it lines up with that other 180 support, assuming it doesn't go there overnight. If they do like earnings, again, overhead, we have to get above that 300 to 315 range right up here. Otherwise, going back to the daily, I think we may just chop around here. Even if earnings go well, we have some resistance to break through, and maybe we continue to chop around a little bit more before potentially going up. A bit of indecision. Hard to say how things are going to go tomorrow, but keep your eyes on earnings. If you are either invested in Tesla or you're hoping to build a position, if you can get in at this price point down here, or even if we hit it sooner down here around that 170 range, that would be a fantastic entry. And I would scoop up as much of it as I could at that level, because if we're thinking to the future of robotics and autonomy, I still think despite all the crap that's going on right now, by 2030, 2032, Tesla has enormous growth potential. Okay, a couple last charts. Novo Nordisk, this is one that I pulled up on Friday. Again, you can watch that video for all my caveats. But the reason I'm looking at this, even though I don't normally like to play in the biotech or the pharma space, is because we're into all this really strong support here. We had 456 or 460 days of consolidation and then had that explosive breakout. So this is really where I would anticipate support to come in on Novo Nordisk. Again, there's competition in the space now. Some of their drugs didn't lead to as much fat loss as was projected, as you can see by this. I think that was announced right around there. But as I said on Friday when I had my first limit order trigger, and then I ended up buying a little bit more at these levels today, because of the competition and all that, I don't expect this to go back to all-time highs. What I'm looking for, even if we go down a little bit more into this range, I'm looking at riding this bounce and seeing how far that goes before it exhausts. And then I imagine some kind of consolidation until maybe they have a new wonder drug and we break back out. But I'm really just scouting for that bounce to get in and out quickly on something like this. Because the biotech and pharma space, it can be more volatile than crypto. Okay, last chart of the day, we're going to look at Palantir, and I think there's also relative strength in Palantir. I would love to see us break above this 50% level and stay in the top half of this range to indicate a recovery. But part of the reason I think it's showing relative strength is because it came out last week that SpaceX is in the lead to build the Golden Dome defense system for the US, and that would be done in partnership with Anduril and Palantir. So they're definitely seeing some positive momentum with that, but keep your eye on this 50% level. Again, as we've discussed, on this move down, things in the lower half of a 50% level are generally weak. Up here, they're generally stronger. We've had a good rebound, but we still have a little bit of work to do for Palantir. Okay, so that's it for the interesting charts to look at right now. Again, if you have requests, leave those in the comments and I'll address those in the next video. I do have a couple days of work travel coming up, so I'll be a little quieter online, but I'm getting back just in time for the Friday wrap up. I'll see you guys then. Bye for now.